Okay, students, now we are in question number 9, okay, from cash flow statement. You can see that there is a profit of 1,42,000, okay, during the year that has been earned. But that 1,42,000 is not the net profit before tax, that is NPBT. Okay, you have to do some kind of calculations and all, because there is transfer to general reserve, okay, and there is provision for taxation also. Okay, so how to solve this 2,82,000? So let us go to working note here. I have written, it's very small out here, but in the PDF when you can check, okay, it is written nicely, okay. So net profit is 1,42,000 that has been earned during the year, okay. Add provision for taxation, okay. This provision for taxation is actually the amount of profit which is set aside for the payment of tax purpose of, okay. So you have to add it to the net profit, okay. And there is again this transfer to general reserve of 20,000, okay. So when you do the addition out here, you will get 2,82,000, okay. So this is how you get NPBT, net profit before tax, okay, 2,82,000. Okay, so in uh, question number 5, I had said that there can be 4 steps also, okay. That is step number 1, NPBT. Step number 2, adjustment for non-cash and non-operating activities. Step number 3, adjustment for working capital. And adjustment, sorry, I mean step number 3, 4 will be this one, tax paid, okay. But before you pay the tax, it is the cash generated from operations, okay. So let us begin. So after writing this 2,82,000, okay, uh, we have to do the adjustment for non-cash and non-operating activities. So non-cash and non-operating activities are here. This depreciation on fixed assets, this is a non-cash activity, because whenever you subtract depreciation from profit, no cash goes out, okay. And same it happens for the this preliminary expenses also. Whenever you write off the preliminary expenses, no cash goes out, okay. And this profit or loss on sale of fixed assets, these are actually related to investing activities, so these are non-operating activities, okay. So it has to be also adjusted, okay. So when there is loss, we do addition, and when there is profit, we do subtraction, okay. So what do you mean by this preliminary expenses? I think you already know in class 11, okay, but still let me tell you in brief that preliminary expenses are those expenses which are actually incurred when forming a business, okay. So after doing these adjustments, you will get this amount, 3,16,000, okay. And this 3,16,000 is actually the operating profit before working capital changes, okay. I think till this step you are okay with it, okay. First you write NPBT, and after that you do non-cash and non-operating activities, I mean the adjustment, okay. So after which you will get operating profit before working capital changes, okay, 3,16,000, okay. And we have to do the adjustment for working capital changes, okay. So you can see here, whenever there is an increase in current liabilities, you do the addition, okay. Now check here in the question, trade creditors, okay. Previously it was how much, 25,000, but this year it is how much, 32,000. So it is increasing by 7,000, okay. So whenever the liabilities, I mean the current liabilities, they increase, you have to do the addition, okay. And whenever the current liabilities they decrease, you have to do subtraction. So you can see here in bills payable, okay, previously it was 20,000, but this year it is only 17,000. So bills payable, they are decreasing by 3,000. So this 3,000, okay. And here in current assets, as you can check here, trade debtors, bills receivable, and prepaid expenses, okay. These are current assets, okay, and they are increasing, okay. Trade debtors previously it was 29,000, but it is now increasing up to 34,000. So it is increasing by 5,000. So whenever the current assets they increase, we have to do the subtraction, okay. And similarly, bills receivable are also increasing by 7,000. Previously it was 18,000, but now it is 25,000. So 7,000 is the amount, okay. And again, this prepaid expenses are also increasing by 1,000. Previously it was 800 and now it is 1,800, okay. So this is the case. So 5 plus 7, 12, 12 plus 1, 13. So this is your negative figure, okay. So we use bracket sign to denote subtraction, okay. Here in this question, unlike in question number 5, we have tax paid, okay. So in question number 5, if this was question number 5, let us suppose that way, here we would get the answer, okay, net cash flow from operating activities. But here in this particular question, we have the amount that has been paid for the tax. How much it has been paid? 1,30,000. So after doing the adjustment for working capital changes, instead of getting net cash flow from operating activities, you get cash generated from operations, okay, 3,07,000, from which you have to subtract tax paid, and you will get 1,77,000 as net cash flow from operating activities, okay. So now you may ask me one particular question. There are two things given. One is provision for taxation and the other one is tax paid. How do we do this? How to solve this? See, there are some tricks here, okay, in cash flow statement. There are many tricks and twists, okay. So if there is only one amount of provision for tax, you just add it here when you calculate NPBT, okay. And there is only one uh, amount of tax paid, okay. In fact, there will be only one amount, but in some cases there are two amounts also. But if there is only one amount of tax paid, you just subtract it here, okay. After this cash generated from operations, you just pay the amount of tax. Don't worry about the amount of provision, okay, be it less or more than the tax paid, don't worry about it, okay. But whenever you come across with opening and closing balance of provision for tax and the amount of tax paid, okay, again I want to repeat, whenever you come across opening and closing balance of provision for tax and the amount of tax paid, you have to prepare an account of provision for taxation, okay. As a working note, you have to prepare an account, okay. Then you have to solve the question, okay. First calculate NPBT and then adjustment for non-cash and non-operating activities, after which you have to do the adjustment for working capital, okay. If there is tax paid in the question, you get first cash generated from operations, okay, and then you will pay the amount of tax and then you get net cash flow from operating activities. But if there is no tax paid in the question, instead of getting cash generated from operations, you will directly get net cash flow from operating activities, okay. So this is the only difference here,